For those of you who prefer to invest in REITs where all office properties are in Singapore, you can have a look at Frasers Centrepoint Trust. Listed on the Singapore Exchange since July 2006, Frasers Centrepoint Trust invests predominantly in retail properties located in the various suburban locations in the country. It has a financial year ended 30th September, and sometime in late October, it released its results for the full year. In this video presentation, you will find a review of Fraser Centrepoint Trust in terms of its financial performance, portfolio occupancy and debt profile, as well as its distribution payout to unit holders over the last 5 years between the financial years 2020 and 2024. On top of that, you will also find my technical analysis of the REIT's unit price movements on a weekly time frame since January 2022 together with some of the key price points I've identified and their corresponding distribution yields. Let's begin. Before I begin to review Fraser Centrepoint Trust performances, a quick introduction for those of you who may be hearing about the REIT for the first time. As I've mentioned in the previous slide, its investment focus is on retail malls located in the various suburban locations in Singapore. Currently, its portfolio has 9 retail malls, including Causeway Point, Century Square, Hougang Mall, North Point City North Wing, Tampines 1, Tiong Bahru Plaza, White Sands, as well as a 50% interest in Next and Waterway Point. On top of the 9 retail malls, its portfolio also has one office property in Central Plaza in Tiong Bahru, which was included when Fraser Centrepoint Trust acquired Asia Retail Fund Limited back in October 2020. Following the acquisition, the REIT has been embarking on asset enhancement initiatives on the properties to improve their returns, such as Century Square, Tiong Bahru Plaza, and White Sands. In September this year, asset enhancement works in Tampines 1 was completed, and the REIT announced the next mall that will be undergoing asset enhancement works will be Hougang Mall from the second quarter of the calendar year 2025 till the third quarter of the calendar year 2026. As I've mentioned at the beginning of the presentation, Fraser Centrepoint Trust has a financial year end every 30th September, and in this slide, you will find its financial performances over the last 5 years, between 2020 and 2024. A few things to highlight here. First, the huge jump in the REIT's financial performance for the financial year 2021 can be attributed to contributions from the properties following the completion of the acquisition of Asia Retail Fund Limited, where its portfolio comprises 5 retail malls and 1 office property. Second, the slight drop in Fraser Centrepoint Trust gross revenue and net property income in the financial year 2024 was due to the absence of contribution from Changi City Point, which was divested in November 2023, along with lower contributions from Tampines 1, which was undergoing asset enhancement works during the financial year under review. Third, as you can see, its financial results have recorded a stable growth over the years. In terms of its compound annual growth rate over the last 5 years, its gross revenue, net property income, and distributable income to unit holders was at 16.4%, 18%, and 16.2% respectively. Of course, the big jump can be attributed to contributions from the properties following the completion of the acquisition in the financial year 2020. If you strip that out and compute its compound annual growth rate over a 4-year period between the financial years 2020 and 2024, its gross revenue, net property income, and distributable income to unit holders would have grown by just 0.8%, 0.7%, and 1.2% respectively, which is just a very stable rate. Next, let us have a look at the REIT's portfolio occupancy profile recorded over the last 5 years. Again, a few things to highlight here. First, its portfolio occupancy have not only seen a gradual improvement over the years, but they are also maintained at a very good level of above 90% throughout the entire 5-year period. Second, in terms of its portfolio weighted lease expiry for retail properties, most of them have leases of about 2 years. This will allow the landlords to continuously refresh retail offerings to the shoppers. Last but not least, in terms of rental reversion, the only year which rental reversion was in negative percentages was in 2021 due to the pandemic. Apart from that, the remaining years saw its rental reversion not only at positive percentages, but also an upward moving one. This will aid to the further improvement of the REIT's financial results in the coming years. Another area of focus whenever I look at REITs is its debt profile to make sure it is not overly leveraged. In this slide, you will find Frasers Centrepoint Trust debt profile recorded over the last 5 years, between the years 2020 and 2024. One of the things I like is that Frasers Centrepoint Trust has a healthy aggregate leverage, which has been under 40% throughout the entire 5 year period I have looked at. On the other hand, while its percentage of borrowings hedged at fixed rates have gone up over the years from a low of just 54% in the financial year 2020 to around 71% in the financial year 2024, but it is still considered on the low side. This led to the average cost of debt going up with the rising interest rate environment during the period and its interest coverage ratio coming down. However, with the US Federal Reserve embarking on a series of interest rate cuts from now till end 2026, the REIT will be one of those that will benefit from lower interest rates due to it having a rather low percentage of borrowings hedged at fixed rates. We should see borrowing costs start to come down in the coming financial year ahead. The management of Frasers Centrepoint Trust declares a distribution payout on a half-yearly basis, once when it releases its second quarter results and another when it releases its fourth quarter results. In this slide, you will find its distribution payout to unit holders over the last 5 years. Frasers Centrepoint Trust distribution payout fell in the most recent 2 years, largely due to an increase in interest expenses. However, the compound annual growth rate of its distribution payout over the last 5 years was at 5.6%. But if you strip out the impact of the addition of properties following the acquisition of Asia Retail Fund Limited in 2020, over a 4 year period between 2021 and 2024, its distribution payout grew at a compound annual growth rate of about 0.2%. Let us now have a look at how Frasers Centrepoint Trust unit price have moved between January 2022 and November 2024 on a weekly time frame. As you can see, the REIT's unit price has largely moved in the range of between $2.05 and $2.38. I have marked out some of the key price points along with the corresponding distribution yields based on its payout of 12.042 cents per unit to take note of. To round up today's discussion, some of the things I like about the REIT is that it is a pretty defensive one, where the malls are in suburban locations that serves residents living in the vicinity. Also, as most of the tenants are in the essential service businesses such as supermarkets, pharmacy, F&B, as well as in the various service industries such as hairdressers, tuition centers, demand will continue to remain resilient regardless of the economic situation. Another thing is that the REITs has a pretty stable financial performance as well as a very strong occupancy rate in its properties recorded in the last 5 years. Debt profile is also considered to be healthy, with its aggregate leverage at under 40% over the last 5 years. However, the only slight negative is that its percentage of borrowings hedged at fixed rates is at the slightly low end. And because of that, we have seen how it has impacted its distribution payout, particularly in the last 2 years. Of course, with the US Federal Reserve embarking on a series of interest rate cuts ahead, we should see an improvement on this front. However, if you ask me, I think the REIT's distribution payout for the coming financial year 2025 ahead will at best be more or less the same as the amount paid out in the financial year 2024. Any year-on-year improvements should come only in the financial year 2026. With that, I have come to the end of my review of Frasers Centrepoint Trust. where I shared with you what the Singapore-listed REIT does, along with its financial performances, portfolio occupancy and debt profile, as well as distribution payouts recorded over the last 5 years. On top of that, I've also shared with you my technical analysis of the REIT's unit price movements on a weekly time frame, as well as marked out some of the key price points along with their corresponding distribution yields to take note of. If you found the contents shared in this video useful, I would greatly appreciate it if you can give this video a like, and at the same time, consider following this channel so you will not miss out on any new videos I will be posting in the future. Thank you for watching, and I look forward to talking to you again in the next video.